Hello everyone, welcome back to Stock Spy. If you are in your 40s and thinking about building a rock solid retirement portfolio, today's video is tailor-made for you. We are diving into top 5 dividend stocks that are not only great for income today, but also are positioned to thrive 20 to 25 years from now. These companies have proven themselves over decades, operating in industries that will remain relevant far into the future. And most importantly, they also have a track record of growing their dividends year after year. So grab a coffee, hit that like button, and let's get into it. First up is Johnson & Johnson, ticker symbol J&J. J&J has been around since 1886 and it's more than just Band-Aid and baby powders. The company operates in 3 key sectors: pharmaceutical, medical devices, and consumer health. So why do they make the list? Because healthcare is timeless. As global population ages, demand for surgeries, medication, and long-term care will skyrocket. By 2050, the number of people over 65 will globally double. That's a massive tailwind. Now let's look at the dividend history. J&J has raised its dividend for 62 consecutive years. That puts it in the dividend king category. 10 years ago, the dividend was $2.64 annually. Today, it's around $5, representing an 88% increase over the decade. In 20 years, if it keeps growing dividends at even 6% annually, you would be looking at an annual payout of $15 per share by 2045. This is a stock you could own for a decade and sleep well at night. Number 2 is NextEra Energy, ticker NEE. This might surprise some people, but energy, especially clean and renewable energy, is absolutely the future. NextEra is the largest producer of wind and solar energy in the world, and it also operates regulated utilities through Florida Power and Light. Why is it important? Because energy transition is happening now. Governments and corporations are pumping billions into clean energy. Fossil fuels are phasing out. Renewables are expected to supply almost 50% of global electricity by 2040. Now also let's have a look at the dividend history. NEE has grown in its dividend for 29 consecutive years. Over the past 10 years, it's grown from $0.75 to almost $2. It's more than doubling. If this 9% CAGR continues, or even slows to 6%, you could see $6 per share annually by 2045. This is a growth plus income play, a rare combination in the utility sector. Next up is a household name, Procter & Gamble, ticker symbol PG. Think of brands like Tide, Pampers, Gillette, or Oral-B. Here's the truth: humans will always need to clean, shave, and take care of hygiene. P&G owns dozens of billion-dollar brands that dominate grocery stores' shelves across the globe. Even in recession, people don't stop brushing their teeth or doing laundry. Let's look at the dividend history. P&G has raised its dividend for 68 consecutive years, another dividend king. Back in 2013, the dividend was $2.29 annually. In 2024, it's $3.91 annually. That's a 70% increase. With an average 5 to 6% dividend growth rate, this means a potential dividend of $12 per share in 20 years. P&G is like owning a piece of global middle class that's only going to grow. Number 4, we have a modern juggernaut, Visa, ticker V. This is your long-term digital payment megatrend play. Visa doesn't issue credit card. It runs the infrastructure behind trillions of dollars in transactions. As the world continues to go cashless, Visa is in a prime position. In developing nations, more than half of transactions are still in cash. That's billions of people who are eventually adopting digital payment. Now let's look at the dividend history. Visa is a younger dividend player. It's only been public since 2008. Since then, its dividend has grown over 1,000%. In 2013, the dividend was just $0.4, and today it's around $2. That's a CAGR of over 17%. Even if that slows to just 10%, Visa could be paying $14 to $16 per share in 2025. That's your growth-focused dividend stock. Lower yield today, but huge upside for tomorrow. And finally, Microsoft. Yes, a tech stock makes the cut, and for good reason. Microsoft dominates across cloud computing, productivity software, AI infrastructure, and even gaming. In 20 years, enterprise software, cloud computing, and AI won't just be relevant, they'll be foundation to how every business runs. Microsoft initiated its dividend in 2003 and has grown it every year since. In 2013, the dividend was $0.92 per share, and today it stands at $3, a 226% increase in 10 years. If Microsoft grows its dividend by 8% annually, very reasonable considering its cash flow, the dividend could hit $14 per share by 2045. You'll also get exposure to tech, AI, cloud, and a growing dividend, which is a win-win. So to wrap it up, if you are in your 40s and aiming to retire comfortably in your 60s or even in 70s, these are 5 of the stocks that offer defensive strength, growth potential, and dividend reliability. Just to recap the niche: J&J, Johnson & Johnson, timeless healthcare and pharmaceuticals. NextEra Energy is into renewable energy and utilities. Procter & Gamble, everyday consumer staples. Visa, the future of digital payment. And Microsoft, cloud software and artificial intelligence. These aren't speculative bet, they are future-proof income machines. But investing now and reinvesting dividends, you're building a retirement portfolio that might work for you, even while you sleep. If you enjoyed this breakdown, don't forget to subscribe, like, and drop your favorite dividend stock in the comments. Thanks for watching. Until next time, stay smart, stay invested, and keep building that freedom fund.